Good morning. As the sun rises over Tokyo, a new day begins not just for Japan, but for the entire global financial community. Today, all eyes are on the Japanese yen, a currency whose movements ripple far beyond the borders of this island nation. The Japanese yen is making headlines again, and not just in financial circles. Its recent moves are grabbing the world's attention. From the bustling trading floors in London and New York to the living rooms of everyday people, everyone is watching to see what happens next. The yen story is no longer just a matter for economists and bankers. It's become a topic of conversation for anyone concerned about the global economy. After months of dramatic decline, the yen has staged a partial recovery this morning, December 29, 2025. This sudden shift has caught many by surprise, as the currency had been steadily losing value for much of the year. Now, with a sharp uptick, investors and analysts are scrambling to understand what's driving this turnaround, and what it could mean for the months ahead. This isn't just about exchange rates. The yen's value is a key signal for the world's fourth largest economy and global financial stability. When the yen moves, it sends a message to markets everywhere about the health of Japan's economy, the confidence of its consumers, and the strategies of its central bank. The yen's fluctuations can also hint at deeper trends, like shifts in global trade, changes in interest rates, and the appetite for risk among international investors. When the yen drops, it sends shockwaves through international markets, affecting trade, investment, and even the prices you pay at home. Japanese exports become cheaper, which can boost sales abroad, but it also makes imports more expensive for Japanese consumers. This can lead to higher prices for goods ranging from electronics to food, not just in Japan but around the world. The impact is felt by multinational companies, local businesses, and families alike. The recent bounce back follows a period of intense pressure, with the yen hitting a worrying low just 10 days ago. Traders were on edge, watching for signs of intervention or policy changes. The volatility has created uncertainty, making it harder for businesses to plan and for investors to predict what comes next. For many, the yen's recovery is a welcome relief, but it also raises new questions about how long this stability will last. Japan's leaders have responded with bold action, determined to stop the slide. The government and the Bank of Japan have stepped in with a mix of policy measures, public statements, and behind-the-scenes negotiations. Their goal, to restore confidence in the yen and reassure both domestic and international markets that Japan remains committed to economic stability. As we close out 2025, the yen's fate is a central story in the global economy. Its movements are being tracked by investors, policymakers, and ordinary people in every corner of the world. The outcome will influence not just Japan's future, but the direction of global trade, investment flows, and even the cost of living for millions. So, why is everyone watching the yen right now? Because its story is about more than just numbers on a screen. It's about the interconnectedness of our world, the challenges of economic uncertainty, and the choices that will shape our shared future. Let's break down what's happening and why it matters to all of us. To understand today's drama in the currency markets, let's rewind and take a closer look at the Japanese yen's wild ride over the past year. The story of the yen is more than just numbers on a screen. It's a tale of global forces, government decisions, and the daily lives of millions of people in Japan. The yen, once seen as a symbol of stability, has been on a roller coaster that's caught the attention of investors, policymakers, and ordinary citizens alike. Over the past several months, the yen has been steadily weakening against the US dollar, reaching a staggering 38-year low in July 2024. Just before the holidays, it tumbled to 157.78 per dollar, a level not seen in decades. This sharp decline didn't happen overnight. It's the result of a complex mix of economic trends, including Japan's persistently low interest rates, global inflation, and shifting investor sentiment. Each new headline about the yen's fall sent ripples through financial markets and raised fresh concerns about what might come next. For many Japanese families, the weak yen is more than just a news story. It's something they feel every time they shop for groceries or fill up their cars. While a weaker yen can be a boon for exporters, making Japanese goods cheaper overseas, it also means that imports like oil, food, and everyday essentials become much more expensive. This has put a real squeeze on household budgets, forcing many to rethink their spending and make tough choices at the checkout counter. The government and the Bank of Japan have found themselves in a difficult position, trying to support economic growth while also preventing the currency from spiraling out of control. Policymakers have debated whether to intervene directly in the markets or adjust interest rates, but every move comes with risks. Too much intervention could spook investors, while too little could let the yen fall even further, undermining confidence in Japan's economy. Recently, we've seen a bit of a turnaround. The dollar now trades at 156.3 yen, a slight recovery that reflects mounting pressure on policymakers to act decisively. Traders and analysts are watching every statement from the Bank of Japan, searching for clues about what might happen next. The stakes are high, and even small changes in policy or tone can send the markets into a frenzy. Markets have come to realize that without some form of intervention or policy shift, the yen's slide could quickly spiral out of control. The fear is that unchecked depreciation could trigger broader instability, not just in Japan but across global markets. That's why every move by the Bank of Japan is being scrutinized so closely. The Bank of Japan's actions are now being put to the test. Traders are recalibrating their expectations, trying to anticipate whether the central bank will stick to its ultra-loose policies or finally signal a shift. The uncertainty has made the yen one of the most closely watched currencies in the world right now. For years, the prevailing wisdom was that Japan would keep interest rates ultra-low, even as the US Federal Reserve hiked rates to fight inflation. But now, that old belief is being challenged. With inflation rising in Japan and pressure mounting from all sides, some wonder if the Bank of Japan will be forced to change course sooner than expected. All of this uncertainty is fueling dramatic swings in the currency markets. As investors, traders, and policymakers try to figure out the new rules of the game, the yen's wild ride is far from over. The next chapter could bring even more surprises, and the world will be watching closely to see what happens next. The Bank of Japan just made its boldest move in decades, marking a pivotal moment in the country's economic history. For years, Japan has been synonymous with ultra-low interest rates, a policy that shaped its financial landscape and influenced global markets. But now, the central bank has taken a decisive step that signals a potential turning point. The BOJ has raised its key rate from 0.5% to 0.75%. While this may seem like a modest increase, it's a significant departure from the near-zero rates that have defined Japan's monetary policy for decades. For Japan, long known for zero or even negative rates, this is a seismic shift. The country's central bank has long resisted tightening, even as other major economies hiked rates to combat inflation. This move marks a new era for Japanese monetary policy. The goal is clear: to fight persistent inflation and lend support to the struggling yen. Rising prices have squeezed households and businesses, while a weaker yen has made imports more expensive. Even so, Japan's rates remain low compared to global peers, with the US Federal Reserve and European Central Bank maintaining much higher benchmarks. This gap continues to influence capital flows and currency values. For ordinary savers, inflation still outpaces returns on savings accounts, eroding purchasing power and raising concerns about the future of personal finances in Japan. Many BOJ board members see this as just the start of a gradual shift. They're signaling that more rate hikes could be on the horizon as the bank adapts to changing economic realities. Analysts and economists are already speculating about the pace and scale of future increases, with some predicting a cautious but steady tightening cycle. Yet, despite the announcement, the yen kept weakening, surprising many who expected a stronger response. Investors seem unconvinced that this hike alone will be enough to reverse the currency's decline. Markets are demanding more proof of the BOJ's commitment to tightening. Traders and global investors are watching for concrete signs that this isn't just a one-off move. The BOJ now faces mounting pressure to follow through on its signals, as both domestic and international observers scrutinize every statement and policy tweak. With the world watching every move, Japan's central bank is at the center of global financial attention. The implications of its decisions ripple far beyond its borders. The big question remains: will this be a one-off adjustment, or the beginning of a sustained campaign to normalize rates after years of extraordinary policy? The answer will shape not only the yen's future, but also the direction of global markets and the strategies of investors worldwide. Japan's government isn't just relying on interest rates, they're talking tough too. Finance Minister Satsuki Katayama has warned traders that Japan won't tolerate wild swings in the yen. These verbal threats are meant to spook speculators and slow the currency's fall. The memory of last summer's massive intervention still lingers, reminding markets that Japan can and will act. The government's goal: keep the yen's decline orderly, not out of control. But fighting global forces like high US rates is costly and difficult. For now, strong words are holding the line, but everyone knows words alone may not be enough. The next move could be decisive. Japan's actions have upended the currency trading playbook. The old carry trade, borrowing yen to buy higher-yielding currencies, has become riskier. Now, traders are using other currencies, like the Australian dollar, to bet against the yen indirectly. This makes it harder for Japanese officials to track and counter market pressure. The market is now a complex web, with bets spread across multiple currency pairs. Thin holiday trading adds to the volatility. Traders are constantly recalculating. Will the BOJ hike again? Will the government intervene? Will the US slow down? Every answer shifts the yen's path in unpredictable ways. The game has changed, and so have the risks. The yen was once the world's safe haven, where investors ran during crises. But years of ultra-low rates have eroded that reputation. Now, holding yen means missing out on higher returns elsewhere. Investors are rethinking the yen's role, weighing its old safety against new costs. If the yen is no longer the go-to in a crisis, global financial dynamics shift. Japan's own challenges, aging population, high debt, slow growth, add to doubts. The yen's weakness has removed a key shock absorber from the global system. The safe haven isn't sunk, but it's taking on water. Investors are watching closely. The yen story is just one part of a bigger global currency puzzle. The US dollar remains dominant, thanks to high Fed rates that attract investors. Other currencies like the euro and pound are caught between their own issues and the dollar's pull. Every Fed move sends ripples worldwide, influencing other central banks and currencies. Right now, all eyes are on the Fed's next steps. Will it cut rates more or hold firm? The answer could push the dollar higher, squeezing the yen and others, or offer relief. This is why global markets hang on every Fed signal. The tempo of the world economy is set in Washington. Everyone's guessing what comes next. Markets aren't just moved by numbers. They react to global politics too. Progress in Ukraine could boost confidence and ease inflation, but the situation is fragile. In Asia, China's military drills near Taiwan and North Korea's missile launches are raising tensions. These risks add uncertainty, making investors nervous. Traditionally, such turmoil would boost the yen, but its safe haven status is now in doubt. Investors are left guessing. Does geography make the yen safer, or do low rates make it unattractive? This confusion is fueling market anxiety. The world is watching and waiting. Why does the yen matter to you? Because its moves ripple into your daily life. A weak yen can make Japanese goods cheaper, but it also hurts US companies competing with imports. If you invest in global funds, currency swings can impact your returns. Even if Japanese stocks rise, a weaker yen can shrink your gains. The big question: will Japan keep raising rates, intervene, or will the US Fed shift course? The answers will decide if the yen stabilizes or keeps swinging. In our interconnected world, what happens in Tokyo can hit your wallet at home. The yen story is a reminder. Global finance is everyone's business. Stay tuned. This drama is far from over. Your financial future could depend on it.